Okay, good evening, everybody. Let's go ahead and get started. Let me know if you guys can hear my audio and see my screen in the chat box. Just give me a little Y or yes there, just to let me know that it is indeed working. Hope everybody's having a fantastic evening so far. I'm looking forward to this webinar tonight. I've been really looking forward to this class, so got a lot of fun stuff prepared, which I think you guys will like. And yeah, so let's go ahead and get started. Before we jump into our instruction for the evening, as always, need to remind you guys about the risks involved in this market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your lot size is, and ultimately how that would affect your account if you were to lose money. So make sure that you're going through that process each and every time that you take a trade. All right, like I said, I just want to welcome everybody here. Also want to give a shout out and say hello to those of you watching this in the recording. Want to say hello to you guys as well. Okay, so throughout the webinar, if you guys have questions, feel free to ask those questions in the comment or in the chat box below, and I'll get to those questions as soon as I can. But what I'd like to do today, so this is our sentiment and overnight trading webinar. A couple of things I'd like to introduce on sentiment first. So this is what I'd like to do today. I'd like to go over sentiment, just a couple of things that we're doing with sentiment, some additions that I've made on the site. Want to show you guys what that looks like. Um, I want to show you guys some things that I've been doing personally to make some money throughout the week with the scanner and with the new COT scanner, which we just introduced, which is really, really cool. Some of you have been able to use it and give me feedback on it. And well, I'm sure I'll make some adjustments to that as well, but that's been pretty cool. So want to show you some strategies on how you can take some additional trades throughout the week outside of the weekly trades. Um, and yeah, that's pretty much the game plan today, unless you guys have other questions. But what I'd like to do first is just talk a little bit about sentiment. First of all, I wanted to show you guys this. I added a new tab onto the site. A lot of you may have had a chance to dive into this, but I added a sentiment page. This is actually powered by and courtesy of my FX book. They were gracious to let us put this on our website, which is really, really cool. So if you want to access live sentiment data, this is now available. And not only is it available, this is actually free for anybody, whether they're a member or not. Um, the scanners, obviously, those are proprietary. So Steve Scanner and the COT scanner, those will remain as a membership feature in the program, but this anybody can access, which is really, really cool. So you can kind of scroll through each currency pair and see where the current sentiment status is for each one. The most active or major Forex pairs, those will be at the top on the sentiment page here. So you got the euro dollar, you've got um, pound dollar, USD yen, and so on. Those major pairs, you can see where um, I actually kind of like these guys' sentiment indicator because, for example, when I hover over the euro dollar, it shows me the percentage. So you can see 88% of retail is long on the euro and 11%, or excuse me, short on the euro and 11% short, or excuse me, 88% short and 11% long um, with the euro right now. And then 41% of traders who have positions connected to my FX book have an outstanding position on the euro dollar, which is really, really cool. So, um, that's a feature that my sentiment index on the scanner doesn't show. So that is really cool that these guys actually do demonstrate what percentage of all traders have a positions, and they actually tell you, okay, it's you can see right there it says, what is that, 38,000, 39,000 contracts long versus 5,000 contracts short. Or no, I got it backwards. 39,000 contracts short to 5,000 contracts long, which is interesting. So this, like I said, this is pretty cool. Like I said, anybody can access this, and it's got every single currency pair on here, all 28 currency pairs plus Gold and silver is also included. I also wrote this right here. This is just some information about sentiment and how to use it. And this is also accessible in the members section too. So there's, it's right here. So for those that don't know what sentiment is, Forex sentiment is a tool that we use to identify what retail traders are doing. So the COT report is how we identify what the big guys, the big banks are doing in the markets. And the sentiment tool just helps us see where retail's trending. So retail traders tend to be not so good at trading, and retail is basically people like you and me, just the average trader out there. And so when retail traders tend to jump into long positions, that usually means the market's going down because they like to buy when the market's going down. And when the market's going up, retail traders like to sell because they think it's a premium, and so they want to sell at the market when it's gone higher. Um, so that's kind of just I won't go. I've got lots of other webinars where I go into a lot more detail on sentiment, but that is the basic gist of it. And and the other thing that's important to know is that most retail traders are not very good at trading. And so when they pile into, as you can see, like right here with the euro, they're 88% short. I can tell you right now what that chart looks like on an hourly time frame or a 4-hour time frame. I can tell you right now that the euro dollar has been going up just by looking at the sentiment, just like looking at the data. Because if most retail traders have indeed if they've piled into short positions, then that tells me that the market's at some kind of premium right now, or a perceived premium, and so retail traders are probably looking to send that lower, subsequently sending the euro higher, right? So the euro dollar has probably been going up without even looking at the chart. I can just tell you that by looking at this information. And so, like I said, when you're using sentiment, these sentiment indexes, most of the time, you're going to find that traders are usually in the wrong direction, um, and just retail's in the wrong direction overall. And so we typically take a contrarian viewpoint to sentiment. So when we use this on the scanner, in fact, let's head over to the scanner real quick. We have a section um, that's designated specific just to sentiment, and we take a contrarian view. So when you look at the sentiment signals, like if we just filter the scanner by sentiment signals here, you can see strong sell, strong sell. All of these are strong sells. Then you've got some strong buys right here. And then you got some neutral signals down here. Um, when you have this is basically just telling us which direction retail is going. So if retail is tending to, like for example, right here with the Aussie franc, 70% of retail is long right now. We're going to take a sell signal, or that's going to be the general bias, is to sell the Aussie franc if most traders are indeed long, which they are. When you go to the flip side down here, you can see stuff like here's the franc yen. Franc yen retail traders are 84% short. So we're going to take a general strong buy standpoint to that currency pair at the moment, at least from a sentiment standpoint, right? Because we have other things too, like the long-term data, the 5-week shift and the commercial weekly shift that also determine whether or not we want to buy or sell. But um, but that's from sentiment at least, right? So I just wanted to show you guys that. So like I said, if you ever wanted to dive in here, um, this actually does update live. I actually wanted to tell you guys this, just an FYI on Steve's scanner right now. Um, the I had to solve a problem with the sentiment. Where I was shopping to get sentiment data to put on the scanner no longer updates live. So just an FYI, this typically will update once every 24 hours, so it's not a live update anymore. But I just wanted to let you guys know that on the Steve scanner, it's not a live update as it used to be, but um it's still fairly accurate. Like it's not going to make a huge deal if it's not updating live, but I just wanted to let you guys know. It's just a problem I had to solve the other day. because it wasn't updating live, and it turns out that it no longer updates live. However, if you go to the sentiment index over here with my FX book, courtesy of them, right? This one is live. This is a live update. And so if you are kind of like a sentiment trader and you do want live updates, you can get that right here. And like I said, this is a feature that anybody can access, not just members, which is kind of cool. Okay, cool. So the next part that I wanted to jump into, so I wanted to show you guys sentiment. I wanted to give you an update with that. And like I said, we take a generally a contrarian view to what retail traders are doing when we look at the sentiment index. The next thing I wanted to jump into is I wanted to show you guys how I'm looking for some shorter term trade opportunities. And I wanted to spend some time today kind of going over the new COT scanner. So we built this new COT scanner, which we may do a few more things to it, but I kind of like the way it is. This is a really cool tool. I didn't want to overcrowd Steve's scanner with just more information because the scanner, the way I have Steve's scanner right now, I really, really like it. There's a slight adjustment I might make to Steve's scanner, but it won't affect the way it's viewed. What I'm gonna do, in fact, maybe I'll just, while I'm on that topic right now, let me just head over to Steve's scanner. One of the things that I've been wanting to do is I need the like when a currency pair gets into crowded market stage, I need the signals to pop up a little bit sooner. So like for example, you'll notice the overall signal with like the euro yen and the pound Aussie is a neutral right now. I need those to become strong sells a little bit faster because you can see right now that we're in crowded market territory. You can see we got 5 out of 5 stars with the euro yen, pound Aussie, pound yen, and NZD JPY. Those four currency pairs have really done a good job this week in going the direction of the long-term signal because they are indeed crowded. And so the only adjustment I imagine myself making next week is just giving a little bit more clout to the long-term signal when it finally does become a crowded market signal. So because I need the overall signal to respond to this a little bit faster. So that's probably, you guys won't see that happen. I'm just letting you know that that's something that I am going to be doing this weekend is I'm going to increase the sensitivity to crowded market signals on the scanner. So when we do get a crowded market signal, that is going to be um, like it's going to be a little bit more obvious that we're taking the trade because of the crowded market signal. Because what happens is sentiment doesn't actually respond very quickly to the crowded market concept. And I love the crowded market signal because it is a leading indicator. When a currency pair gets into crowded market phase, it's one of the few tools we actually have that will tell you what the market's going to do before it even happens. No one really likes an indicator that tells you what the market's already done, which a lot of the times sentiment does often act that way. I'm not trying to say you shouldn't use sentiment. Sentiment's a great tool, but it is kind of a lagging indicator versus one of the things we have in our arsenal with the COT report is the ability to detect whether something is crowded. And that's one of the best leading indicators we actually have. And so I want the sensitivity to increase on crowded market signals because when you are aware of that before the move even happens, a lot of the times you can take some really fantastic trades. So that's something that I'm going to be doing. This weekend is just nothing's going to change as far as your visibility on the scanner. I'm just going to increase the sensitivity of the long-term signals when they do in fact go into crowded market stage. That's the only thing that you're going to see. So that'll be pretty awesome. I'm excited for you guys to start trading that and kind of getting some extra solid signals out of the scanner from the crowded market. Okay, So now let's head over to the COT scanner. So again, this is Steve's scanner for those of you that are new or don't know what Steve's scanner is. And this is what we've been using primarily and what we will continue to use primarily to find trade opportunities. Now, if you want to dive more into the COT scanner, this is really, really cool because this is new as of like this week. We pretty much introduced this. I love this COT scanner because um, this helps me dive into the COT report data in a little bit more detail. I would say it's uh like I said, this is going to help us kind of detect certain movements in the markets before they even happen, which I'm really, really, really excited about. So let's talk about what this is. And by the way, I want to make sure that um, in this program, we're kind of a tight community together. So if you guys have tweaks that you'd like to suggest, or if you have things that you want to just say, hey, Steve, I'd love it if the scanner could do this, or I'd love it if the COT scanner could do, whatever you guys want it to do. Send me those, send me an email with your suggestions or something on Telegram, or if you have my phone number, you can send me a text message. I'd love to get your input on these tools just because I'd like to make these tools very friendly. My goal every day, guys, honestly, I'll just tell you the truth. Like, I just want to make you guys as much money as I can. Like that is my goal every single day is I'm just trying to find ways to help you guys have as much success as you possibly can in the market. So I'm trying to innovate and make things as better and intuitive as possible. So if there's something that's obvious where you're like, dang, I just wish he could do this, just let me know because I'd love to consider making that adjustment on on these tools that we're making. But I love this, guys. Let's dive into this for those that don't know what this is. So I've been using this to find more shorter term signals throughout the week, which I think is very appropriate for this call tonight. And I want to show you guys what this does. So basically this COT scanner, it doesn't look at sentiment. It doesn't look at really anything else. The only thing this thing displays is just the shift in non-commercial, which is also known as large spec data from the COT report. That's all it does. And it looks at it from a week-long standpoint, a 2-week, a 3-week, 4-week, 5-week, and a 10-week standpoint. Okay. And I picked these different weeks because I wanted to see what the change in COT data was from the previous week, what was the change over the last 2 weeks, 3 weeks, 4 weeks, and five, and also 10, because I wanted this to become more of a shorter term tool, something where we could find really probable trade setups on a much shorter term period. That's why I'm looking at the most recent COT reports here, but we're also looking at, like I said, the 10-week, and I'm going to show you why the 10 week's important too. You'll notice here the 5-week, these are the exact same numbers that you'll see on Steve's scanner because the 5-week shift is this 5-week shift column is the exact same thing that's also just on the original Steve scanner. So you'll notice like the NZD yen, this is the exact same number. NZD franc, this exact same number, right? So that column's also available over there. We just don't have all these other columns on there, and that's okay. I don't want to put all these other columns on there because quite frankly, the scanner would get too crowded, and I don't want it to be. It's already crowded enough with a lot of important things, and I just don't want to make it. Um, if anything, I just want to make the current scanner more potent as far as figuring out which direction of the week we should be going. That's something that I'm always innovating and trying to make better. But but this is pretty cool because now you can kind of sit back and only look at COT data, which is kind of nice. And one of the things that we've been doing specifically, I want to show you a couple of ways you can use this to find some short-term signals. So one of the things that we've been doing this week is we've been filtering by, the last 1 week, 2 weeks, or 3 weeks mainly. So just some of the most recent COT reports and the subsequent shifts. And you can filter these right here. So for example, with the NZD JPY, this is a plus Um, 45% net shift over the last 3 weeks. You got the NZD franc plus 39%. Those are some pretty big positive shifts. And the reason why I'm going directly there is because I wanted to show you um, the logic behind this. You can actually watch the class from this morning. We talked about this quite a bit. And the class from Monday, we talked about this as well. So basically, this is kind of cool because when you can see that over the last 3 weeks, I've had these pretty big shifts, you can now compare how much of the shift came 3 weeks ago. Like, right, for example, you can see that on the NZD JPY, 45%, there's been a 45% net positive shift to buy the NZD JPY over the last 3 weeks versus 4 weeks ago, it was 51%. So you can see that most of this buying activity did in fact happen 3 weeks ago. Like if you compare it to 2 weeks ago, there was still quite a bit of buying going on. Like there was a net positive shift over the last 2 weeks of 26% to buy the NZD JPY. But you can see that nearly half of this has come in the last 3 weeks. So that tells me that 3 weeks ago, the banks put a pretty big long position on the NZD JPY. Um, and like you can see other ones like, for example, with the NZD franc here, with the NZD franc, you can see, okay, they're 39% long or the net shift over the last 3 weeks. 2 weeks ago, it was 31%. So yeah, most of this happened right here 3 weeks ago. Actually, no, a good amount happened 2 weeks ago because yeah, no, this is actually pretty consistent. Um, but like, let me show you this. So 4 weeks ago, it had a positive shift of 47.82%, but 5 weeks ago it was 46.78. So what does that mean? Because those are practically the same number. Well, that tells us that a lot of this positive shift took place sooner than 5 weeks. So if this number is about the same as this number right here from 5 weeks ago, that tells us that a lot of this shift happened right here. Or more recently. It did not happen necessarily 5 weeks ago. It happened sooner than that. Like more recently, this shift happened. Um, and actually, another cool thing is like you can say, okay, well, 31%, there was a 31% positive shift over the last 2 weeks. So a lot of that shift, like that 31% or 31 of the 47 or of the 39, that's kind of what we're saying happened in the last 2 weeks, right? Hang on, guys. I'm gonna the sun's gone down and my light's off in here, so I'm gonna give myself some more light. Let me just turn on my light real quick, 1 second. All right, that's much better. It was getting pretty dark in here. Okay, so that's basically what I was just trying to say is that's one way you can read this basically. And so you do have to do a little bit of homework. You kind of have to say, and it is a little bit of an eyeball test. Okay, so it's not, and maybe I'll try to find a way to make it. Um, I think this is going to take me some time. I'm going to have to brainstorm how to do this, but I'll try to make it not so much an eyeball, more of just it'll just tell you what to do rather than you having to kind of figure this out. But in the meantime, let me just kind of show you my thought process on how you view this. Like I said, with this NZD franc, it's had a 31% positive shift over the last two weeks by the big banks. That's pretty big. And when you compare it to the previous weeks, um, by and large, most of this buying pressure has come in the last 2 weeks. When you compare it to the last, like say 5 weeks, you know. In fact, if you were to do some math here, or let's actually do some math here. If you were to do like 31.24, which is this number right here from 2 weeks, and divide that by like from 5 weeks ago, or actually let's just do the 4 weeks ago, 47.82, divided by 47.82 and then multiply that by 100. So 65% of all the buying activity, which has been quite a bit, has happened in the last 2 weeks. So that means 65% of all the buys the banks have been piling into on the NZD franc were added in the last 2 weeks. This is important information because now if we actually pull up the NZD franc, let's actually do that real quick. Let's go to the NZD franc. Where did most of this buying come from? So like I said, 65% of this buying activity has come in the last 2 weeks. So basically all the buying that has been happening has happened essentially from here to about here, because because the COT reports come out on Tuesdays. So somewhere around here is where the last report was given to the CFTC. And then 2 weeks ago, this is where the last report. Oh no, excuse me, it would have been right here. Never mind. So, well, it would have been essentially this report, but whatever buying had happened between here and here. Yeah, so basically whatever buying happened between here and here inside of that purple area, that's where 65, somewhere in there is where 65% of all the buys took place with the big banks. Okay. So they've been buying this pretty hard, more so than a lot of and most other currency pairs. And 65% of all their buys got priced either as low as down here or as high as up here. So we know that they're kind of like suffering right now, which is a good thing for us to know. Like, this is really good homework. This is really good like info that we're diving into with the COT report. This is pretty cool actually, because we've basically discovered that a lot of their buying has already happened. Like they not only has it already happened, but we can tell where they did it. Most of it happened here and up here in this area. And have they made a lot of money on this yet? Not really, because it actually pulled back pretty hard last week. We had a news event Tuesday night. We had a pretty big news event on the Kiwi, and it actually sent the Kiwi lower. Exactly, Lee, you got it. So they won't be selling anytime soon. That's exactly where I'm going with this, is that essentially these guys need to get the market to go up. They need the market to go up because they need to come back and retrieve their buy positions that are trapped up here. We know that the banks have positions that are indeed trapped up in this area. So it's likely that we're going to see this currency pair, it's not going to be a straight line up. So I know this feature lets me draw straight lines up. I'm not saying it'll be like that. It could be a little move down. It could be, a move back up with another little move down again.
Hey traders, it's Steve from the future. I hope you have enjoyed this video so far. If you are getting value out of this video, be sure to hit the like button, click the subscribe button, and share your trading thoughts. I read all the comments, so feel free to ask any questions you have there too. On a side note, I host live trading calls like this one you are watching every day. Some of my biggest trading secrets I share exclusively to just the members in my program. I host these live trading calls every day, Monday through Friday at 11 a.m. Eastern. I also host a basic training webinar every Monday for the newer traders and the regular COT report and sentiment trading webinars every Wednesday night at 8 and 9 p.m. Eastern for the advanced and aspiring traders. All of these calls are recorded and promptly posted on the members' trading calendars at the conclusion of each call in case your schedule does not permit you to come to the live call. All of my members have complete access to the scanner. We call it Steve Scanner. This is an institutional grade trade alert scanner that picks the direction of the week on all 28 major currency pairs and includes trading instruments like gold, silver, NAS 100, US 30, Just in the last 90 days, I have made over 3,000 pips just taking the top trade signals from the scanner at the beginning of the week and then just holding those trade alerts until Friday. If you want access to the scanner, you can start a 14-day free trial with the join link in the description to get started. Lastly, if you really want to be a full-fledged VIP member of my program to get access to things like the basic training course, live signals channel, Steve's scanner, trading calendars, and the one-on-one calls with me throughout the month, you can use code YouTube50, that's YouTube50, no spaces at checkout, and save $50 on your first month. Again, just click the link in the description below and apply that coupon to become a VIP member, and I look forward to helping you with your inevitable trading success going forward. Now, back to the video.
Right. And then ultimately it gets its way to the upside. But that's what we're expecting right now is something like that. And after this news event, you can see they pretty much bought it right back up. They bought all of this down here, sent it up, pulled back, they bought it up, pulled back, they bought it up. If this pulls back again, I imagine that they'll just buy it right back up. That's kind of what we're seeing right now. And that's what I want you guys to detect when you're using this COT scanner is try to find out when and where, and we'll be doing this together. So you don't need to just rely on yourself. Like I'll do this analysis with you guys, and I'm sure I'll give you plenty of signals with this information. But it really is kind of cool to be able to see where they've been doing a lot of their buying, right? Like, see if we filter this, yeah, you can see over the last 2 weeks, the NZD franc is indeed the most bought up currency pair over the last two COT reports. Nothing is more bought than the NZD franc right now, which is pretty cool to see. And it is also pretty cool to see that the banks, they've basically been drowning in their buys. They've got buys that are priced up in here and they're losing on those positions right now. They're actually losing money on those. And the only way they're going to make their money back is if they get this to go back up, which they've been doing. They've actually been getting this to come back up over the last week. NZD franc has been coming back up, but I'm guessing that they're going to just continue to send this up. This is why we placed that trade on Monday. On Monday, I put a little buy limit order right here. Obviously, it stinks now because I missed the buy limit entry by like 3 pips. 3 or 4 pips I missed the entry. So that's a real bummer, like a huge bummer right there that we missed that entry. But, nonetheless, I'm still happy. Like I'm happy that we are analyzing the markets pretty well. We're kind of figuring out what we suspect the markets will do. And I think they're going to continue to send this higher because, like I said, at least, in fact, over the last 1 week, they increased their positions by 13.78%. Well, that was the positive shift that they've increased over the last 1 week. So they pretty much started adding to this position 4 weeks ago, right here, like 40. You can see that 47.82% was their increase. So what is this number? So like if I take this week, the 13.78, so let's do the math on this, 13.78, and then divide that by what pretty much when they started buying, which was 47.82, so 47.82. And then if we multiply that by 100, so 28 to 29% of all their buys. So 29, we'll say 29% of all their buys are priced literally up here. Okay, so that's where their buy, that's where 29, that's a third of their buys. Terrible spot, right? Terrible spot right there. 30% of their position is up there, right? And they're not back. They have not gotten back to it yet. So they're still, like I said, they're losing on that position right now, to the tune of almost 30% of their entire position is trapped up there. Which is why I've been really pushing this buy narrative, because if I can hold this trade long enough, And if I can hold, the positions that I've added here, I'll probably be able to ride this back up with the banks, which I'm excited to do. Um, Now, let's try to find another one, right? So this is one example. So let me put it this way. Let me show you a scenario where maybe I wouldn't be as excited. So this is kind of cool because this market actually pulled back and I literally have evidence that the banks are stuck up there, right? Now, like what if this market instead of having, let's do a rewind. Here, let me delete this. Let's actually delete this stuff. Let's do a rewind back to a week ago, like say over here. And let's just say this market kept going up. Okay, let's just say, let's just say this is where we are now. Okay, so we're right here and the market's now up here. Okay. And I were to look at this information and say, oh, well, hey, the banks have been buying. They're clearly buying this right now. They've obviously been buying for a while, at least for the last 4 weeks, and now the market's up. Well, that's what you would expect it to do because it is, that's what they've been doing. So you would expect it to go up. But would this still be a good buying opportunity? Not necessarily. It's not as obvious because if you buy with them, that is pretty cool to buy with them. Obviously, we want to buy when they're buying, but the problem is if we buy up here, they've made their money. Maybe it's time to take profits on those trades, right? So I don't know if I would be interested. Um, I don't know if I'd be as interested with adding new buy positions up here when they've already gotten their way with the market. So what I like is I like to catch them off guard. I like to find these guys. I like to find the banks when they're down on a position, and then I want to try to ride it back up with them because these guys win. These guys make money. They go in the right direction. And it's interesting to me because this was here. Let's turn off the replay because here's the current market. Um, Even with the news event from last week that sent them in the wrong direction, even with that news event, they pretty much recovered. They pretty much recovered since the news event. And I don't think they're quite done yet. I do think they're going to try to get this to go up even more. I don't know if it's going to go sideways or even down a little bit first, but I think at the end of the day, I do think they're going to get the market to go back up. I think that is their game plan. Um, because like I said, about a third of their positions are trapped in this area, a third of their buys. And that was like the second or third most bought thing. Like as far as where they put their money last week, a good amount of their money went towards buying the NZD franc right there. And they're currently down on this right now, like I said. So okay, another thing we can do, like let's look at another example. So we did the NZD franc, obviously. That was a really good one. And again, I want to show you it's pretty good because it was easy to figure out. We could see that a lot of this buying pressure did indeed come in the last, 2 or 3 weeks, maybe 4 weeks. But I hope it also makes sense that you can see here that a lot of that buying pressure didn't come from 10 weeks ago. It came in the last 3 to 4 weeks. It didn't come 5 weeks ago. Again, it came in the last 3 to 4 weeks. These are stuff that I want you guys to start projecting. I want you guys to start catching these things on the scanner. Another one that we found this morning, again, they are kind of hard to find sometimes. Well, they're not hard to find because you just have to filter them, right? If you just filter the second or third week or fourth week, it's not hard to find which ones are on the move. But if you were to like filter, I don't know, let's find the stuff in the middle. Like right here, here's the Aussie dollar. These aren't really big shifts right here. Here's the pound CAD. Again, not really big shifts, right? This week is a 0.65. There's a negative shift. from 2 weeks ago, and then a positive shift here, and then positive, and then a negative, or then a, this, like, what do you do with that? What do you do with that pound CAD? How the heck do you know which way it's going to go? I mean, 10 weeks ago, it looks like there was some movement, minus 44% over the last 10 weeks, but over the last 5 weeks, really nothing. I don't know if I would be using that pair. Probably won't be using that pair because there's not really much I can dissect from this information, right? So one that we did find was I think it was the NZD CAD. Yeah, so we looked at this NZD CAD here, and what we found is 10 weeks ago, it had a negative shift, and then 5 weeks ago, we're now positive 22, and then 4 weeks ago, plus 28. And every single week, there's been slightly more positivity. There's been more buying pressure going on the NZD CAD over the last 4 weeks. So yeah, yeah, pretty much like 3 to 4 weeks is when a lot of this has come in. It's been pretty consistent though. Like even this last week, they increased by 9.69%. And that's basically a third of all their buying activity came just last week. And it's been pretty consistent. Like I said, it's been over the last 3 to 4 weeks, this NZD CAD's been really consistent. So this is another one where we were able to look at this and say, hey, I think this is a pair that's going to go up, because let's look at this one. This is there's a lot of things that denote or kind of tell us what might happen here on this NZD CAD. Because when you look at this again, um, like I said, a lot of buying pressure came from last week. In fact, of this buying pressure, which basically started 4 weeks ago, right here, where you can see it says 28.13. See, 9.69% divided by 28.13, which is where the buying really began, times 100. So 34% of all the buying pressure came from last week. So with that, that's actually great info. So now if we come back over here, as that means that 34% of their buys are trapped between basically, because this is when the CFTC gets the data, is right there. And then they're measuring from like basically right here. So all of their buys are, not all, 34% of their buys, a little over a third of their buys are priced between basically in that purple box right there. So again, they did not buy very well with that news event. They actually got a little bit hurt on that news event there on Tuesday. And so the market basically came down. They let the market come down from that news event, and they essentially just bought it all up. They formed a triple bottom down here, and they got this nice trend line going on here. And so I took a buy at market with you guys this morning, that I'm looking forward to. I'm looking forward to seeing what this can do. I'm hoping that our analysis is pretty good on this. I believe it is. I like the trend line. I like the triple bottom that it formed here. I like the fact that I know from the COT report that 34% of buys, of bank buys, are here, right? So they're up in this area, right? Inside of that box. Here, let's see. That's kind of, maybe I'll do it like this, right? So 34% of when they started buying is basically there. Now they did buy, we know that they did buy some in here too. There was some buying pressure down here. Those ones they're doing well on. I'm sure they're making money on the ones that they got in here and the ones that they got in here, but they've actually done a pretty good job on those ones. But like I said, they still have a lot of trades up here that are not looking too hot. And I do believe that they're going to try to get the market to go back up to there. Um, I could be wrong. Again, I mean, I'm not wrong about what they have. I know that that's what they did at least a week ago is this. So I know that, but and based off these technicals, I'm pretty certain that they want to try to get it back up to here. So kind of like Lee was saying earlier, they won't be selling anytime soon. I think the same goes for this pair. I don't see a lot of major selling pressure coming in. I mostly see these banks trying to send this higher. Um, that's kind of what I would expect them to do here. Um, there could be some moves down, like, you might retest this trend line here, or it might, maybe it'll just go sideways again, and then you get your move up. I don't know exactly how it's going to happen, but I do believe that you'll see this pair go up based off of this information. So pretty cool. So this is one of the main ways I'm using this COT scanner, and I think it's very, very powerful. And you can find opportunities in here. So I want to invite you guys, please do this. Like, if you want to, you don't have to, but if you want to send me like a screenshot on Telegram and just say, "Hey, Steve, what's your take on this?" Like, I found this, just show me what you found. Like, hey, I found over the last 2 weeks, they've been buying this pair or whatever, or selling a certain pair. And, looks like most of that selling pressure or buying pressure came in the last 2 or 3 weeks. Um, and the market really hasn't gone in that direction yet. Uh, do you think there's an opportunity here, right? Like, definitely send me that kind of stuff because, I'd love to help you, and I'd love to also, heck, if we can't help each other, because if you find something that I missed, then that might wind up being a signal that we take together from the scanner. So this is very, very powerful in a lot of ways. I think you guys are going to like this because it just brings out a lot of you guys gave me really good feedback on the 5 week shift from the scanner, and um, I think that you're going to love this because not only does this have the 5 week shift, but it also looks at the last 1 week, 2 weeks, 3 weeks, 4 weeks, 5 weeks, and 10 weeks. One thing I want to show you guys real quick on the 10 week, get your questions, and if you guys have questions, and we're going to go ahead and wrap up here in just a moment. But over the last 10 weeks, this one's kind of cool. Um, like you can see some of the biggest shifts, like the CAD Yen's had the best shift over the last 10 weeks. The Aussie CAD's had the biggest negative shift. Now, something I'd like you guys to note, the way I'm kind of viewing the 10-week shift is kind of like the crowded market indicator. So, like with the CAD yen, you can see here that over the last 10 weeks, they've really pushed the buying pressure. And most of this buying pressure happened at the first half of the last 10 weeks because you can see that 5 weeks ago, they've been increasing by, 34.83%. Of the 92.10. So that tells me that most of this buying pressure happened in the first 5 weeks, not in the latter 5 weeks of the 10 weeks, if that makes sense. So because of that, that kind of tells me that the banks are slowing down their acquisition of the CAD yen. They're actually slowing that process down. So if I go look at the CAD yen, I think it's actually been coming down, hasn't it? Yeah, it's come down significantly. And this is to be expected um, because they've had their way already with this currency pair, right? They've already had their hoorah, right? If you go look at an hourly time frame, you can see that for the last 10 weeks, which is basically takes you from here to here, uh, they've really bought this. Obviously, this has gone up significantly, which you would expect, but a lot of that buying pressure took place at the first, you know, half of this. Most of this buying pressure happened over here, and very few or not a lot, like the buying pressure has been very insignificant in this last half right here, right? There's been a lot less buying pressure going on here. Okay. Um, and so I see this one I see this one continuing lower um because of this. Basically, this is basically a crowded market. And so you can actually use this COT scanner to basically find the same thing. So if you find something like, oh yeah, CAV Frank is the same thing. You know, most of the buying pressure here took place in the first 5 weeks. The last 5 weeks, not so much. So maybe the CAD Frank is due for a move lower soon. Let's see how it's doing. Today it's down slightly. Yeah, I kind of expect this one to maybe come down soon. And this might be, we might be early on this one because it saw a lot of buying pressure in the first 5 weeks over here, a lot of bank buys going on. And now that process has slowed down, makes me wonder if they've, maybe this one's due for a move lower, right? Yeah, I did get stopped out on that CAD Yen too, Bill. Yeah, it's actually been kind of a real stinko week with the weekly trades. I'm working on, a couple of things with that. Just to comment on that. One, that's part of the system is just to keep taking the trades week over week. There's going to be consecutive losing weeks. We're going to have consecutive winning weeks. My job is to just make sure that we get better signals, right? So that is in my court. One of the things I concluded to do to make the signals better, I mentioned this at the beginning of the call, is I'm going to increase the sensitivity on the crowded market signals. That should help us get some better signals in there, even if it means like maybe this week still would have wound up being a losing week, but if you could get a couple of trades from the crowded market um, that could have offset those losses, that could have been really nice, right? And so I think it's going to be a work in progress, but I think that's going to be a first good step. That's the most obvious thing that I can think of to get better signals is to increase the sensitivity on the crowded market signals. I think that will help a lot. Um, so let's see. Bill also says, is there more info on the newer scanners on the previous recording? Yes. We did a class right here. If you guys want to go back and watch on the calendar, the basic training call that we did on Monday was just a call on just the new scanner. Okay, so the new COT scanner, this weekly training right here that we did on the March 4th, that will tell you everything about the new COT scanner. So I'd highly recommend that you go back and watch that one. We did a little bit of information about it this morning, but if you want just only information about the new COT scanner, that's a good one to go back and watch. Lee says, when you make the adjustment, will it show an overall strong buy or strong sell? Yes. So one of the things that you're going to see on the Steve scanner is nothing's going to change as far as the dashboard goes, but because we're going to increase the sensitivity to crowded market signals, you're going to see the overall signal column have more signals. And when you go along the line, when you like follow a signal across, you'll be able to kind of tell where that signal is coming from. Like, you can see the profile for each currency pair. Um, you're going to see the long-term signal. Obviously that's a strong sell this week on the euro yen or pound Aussie, and you're going to see those currency pairs. You're going to see that the signal is mainly coming from this, but the overall signal will adjust to that info, which will be really nice. I think that will help us a ton. So. All right, great questions, guys. Appreciate you, each one of you. I think we'll go ahead and start wrapping up here. I think this was a good call. Hopefully that helps you guys see the value and what we're going to be using the new COT scanner for. I think we'll take a lot of really legit trades from this COT scanner. So all right, guys. Well, have a fantastic rest of your evening. Oh, and by the way, I'm not available to do the COT report webinar tonight, so this is the only call. Just wanted everybody to be aware of that. The recording will be up, so give it like 30 minutes and it'll be rendered, and you guys can come back and watch this if you want to. So, all right, guys, have a fantastic rest of your evening, and we'll see you guys in the next webinar.